You're going to love this interview. Just got done editing it. I'm glad I got it live for you. I'll be in the comments for the next 30 minutes hanging out, answering any questions you have. In fact, leave a comment below about data points or what you think is going to happen to the company, and I will respond to every comment. Additionally, if you're just loving the content, click the thumbs up and I will go and check out your profile as well and give your videos some love as well. In the meantime, enjoy the interview. Hello, everyone. My guest today is Peter Janosik. He is building a company called SmartLook, which records users on websites and in iOS and Android apps with features that allow you to find useful information, even in thousands of recordings in no time. Peter, you ready to take us to the top? Okay, so talk to us about the product. This sounds a lot like Hotjar. How are you differentiating yourself from other tools like Hotjar?
That's a good question because it's the most common question. People ask us that very often. Basically, what we do, we are combining two markets. We are combining session recording market and event tracking market, and we can do both into one solution. So you are able to filter session recordings through events. You can filter session recordings through in funnels or in your cohort, retention cohort, and so on. So it's much better when you want to analyze your user behavior.
And so I have a bunch of questions about this, but I want to understand kind of the backstory and traction here first. So what year did you launch the company?
We launched the company in 2016.
Okay.
Basically, we raised just a small amount of money in 2016.
How much?
But it was $250,000 US dollar.
Okay. And is that all you've raised to date?
Sorry?
How much total have you raised to date?
That's it.
Okay, just 250.
Yep.
All right, so here's the big question then. How good are you with investing that money to drive growth? What's revenue today?
We have 2 million annual run rate. We grew quite well. We started with small customers in the beginning, but then it was like after 1 year and half we launched SmartLook. We changed our strategy. We are going up market, so we are focusing on bigger customers right now, and that was a good decision because we are growing quite a lot. It's around 7-8% per month over month.
So let's break this down real quick. You're at a $2 million run rate today. How many customers are you working with?
It's 2,000 customers.
Okay, 2,000 customers. And what do they pay on average per month?
2,000 paying one.
What do they pay on average per month?
It's around $80.
Okay. Yep, that works. So 80 obviously times 2,000 puts you at $160,000 a month, or about a $2 million run rate. Now, where were you exactly a year ago? Do you remember how much revenue you were doing then?
Basically, we are doubling almost every year. So it was like 90% growth. So there's like last year it was around 70,000 MRR last year.
And now you're up to 160.
Now it's February, so this December 2019 it was 140. December 2018 it was 75, something like that.
Got it. Yeah, so about doubling year over year. So this is a great story. So I love that you've done so much with such little capital. This is like my favorite kind of entrepreneur to interview. So I appreciate you coming on. So walk us through the magic, right? How did you get your first 100 customers? By the way, entering a market that a lot of people would say Hotjar is already dominating.
Mm-hmm. When we started in 2016, it was for free for 10 months. We launched it as a simple recording tool for free. It was unlimited. You could record everything. And for 10 months, we offering it completely for free. There was no pricing. There was just free package.
Okay, but how did you get the first 100 people to view the website and try it for free?
Because it's not our first startup. We also had another startup before, which is called SmartSup. It's live chat. So we saw in the Google Analytics where our customers are coming from. So we were able to predict that it can be the same. So we target the same channels, or we trying to be visible on that channels. We were visible with our previous project.
Okay, so let me just break that down. You had a prior company with a bunch of users. It was a chat product, and your intuition told you that those same customers would be interested in this new product line. So you basically looked at what channels were driving your old company traffic and you went to those channels for this new product, and that's how you got your first 100 customers for Smart Look.
Yeah, basically like that.
I see.
Yeah,
okay, so you're free in 2016. How many free people signed up before you launched a paid option?
Oh, it was after 10 months, we have 100,000 signups because it was for free. So it was kind of viral. A lot of customers or a lot of signups recommend us because it was free. So yeah, then after a couple of months, David from Hotjar called me and asked me like, what are you guys doing? It looks pretty good. So we already know each other. Like we discussed it with David from Hotjar.
Did he try and buy you? Did he try and buy you?
Not yet.
So what was he calling for then 2 years ago?
It was in 2016, so it's much sooner. But he was just wanted to know why we launched Smart Look.
Mm-hmm. What'd you tell him?
I don't remember exactly, but we used the session recording feature in our previous project. This is live chat, so we wanted to help our customers to see what customers do when they are chatting with them. So basically, we started building this feature in our previous project, but then we just take the feature and build it as a separate project. So that's how it started. So this is what I told him. We are just trying to see if customers are interested in this feature as a separate project, and it seems that they are interested because we had a lot of signups every month.
So you had 100. So you had 100,000 signups after 10 months. Is that when you launched your pricing plan? It was 10 months in.
Then yeah, after that we decided to launch pricing because we already had a lot of infrastructure costs. So we decided we need to know like if we are able to monetize that or not. What
were your total costs per month when you were still free? Do you remember?
We used in 2016 we used a lot of Facebook marketing, paid Facebook marketing, like performance marketing on Facebook, and we get like for signups we paid like 5-7 euro, maybe something like that,
to get one sign up.
Mm-hmm.
Okay, well, so how much did you spend on Facebook marketing that year?
Whole investment, like it was like $200,000.
Okay, maybe. So you didn't tell me this when I said what was your growth channel. You said it was your prior company. No, your real growth channel was you spent $250,000 on Facebook ads, paying $5 to $7 per sign up.
Sorry, I didn't hear you like in a couple seconds.
Yeah, I was just saying your big growth channel in 2016, when I asked you earlier, you said it was your old company, but really it was you spent $250,000 to get signups at $5 a pop.
Like you asked for first 100 customers. So first 100 customers was from organic channels, but then we realized that let's try performance channels.
Yep.
Like Facebook, Google Ads and stuff like that. And we saw that Facebook was great for us. But then after a couple of months, we realized that there are just small customers. They were churning a lot. So we cut that channel and we don't use it anymore.
So $250,000 divided by 5 is about 50,000 signups that you got, of which a lot of those customers were very small. They churned a lot, but some of them told their friends and you had some viral growth, and some of them were also potential enterprise leads. Is that right?
In the beginning, it definitely helped us a lot. I see that I would do that same again if I'm in 2016. It was a good decision. We find some first customers. They are small. They help us to grow. But now we have to focus on bigger customers.
What was your product? What was your price point? Your first price point that you launched?
It was very, very cheap. We started with, I think it was $10 or $15 per month.
Okay, for like unlimited everything, that was your only option?
Oh, no. There was, I think, 100,000 sessions per month. Limit.
Okay. And so what did you grow revenue to? When did you launch that pricing? Was that 2017 now?
It was in December 2016. We launched it in February 2016. In December, after 10 months, we launched pricing. Okay,
and then what was your total revenue in in 2017?
For whole year?
Yeah.
Not sure. I would have to check that. But,
what's a guess?
probably 40 or something. In the end of the year, in December 2017, it could be something like 40 MRR, 40,000.
Okay, so you did like $300,000 or $400,000 total that year.
I can check.
Okay.
But
what do you use to track this stuff?
Chart Mogul.
Mm-hmm. That's a good tool. So guys, just while Peter's looking that up, just to pull some lessons out here, again, they've built a $2 million ARR company with $250,000 raised, but the majority of that raise went to paying $5 per sign up for a free tool for 10 months. So they kind of suck it up for 10 months, get 100,000 users before launching their $15 a month price plan, and now scaling nicely with about 2,000 customers paying on average $80 per month. So Peter, you have that number, 2017 total revenue?
Yeah, December 27th, 2017 was 44,000 MRR.
Okay, and you grew that to about 70,000 in December 2018.
76,140.
Yep. Yeah. So it went from 44 grand a month to $70,000 per month to $140,000 per month year over year.
Yeah.
Yeah, that's obviously, again, good growth. So what's the plan? I mean, how are you? We'll actually flesh out the team first. How many people are on the team today?
It's 30 people. We started hiring a lot this year because we see a huge potential, but we don't have enough people. So we just 30 people in a team.
Okay, 30 folks today. And how many are engineers?
I would say half.
Okay, any quota carrying sales reps?
We have 3.
Okay, they actually carry a quota. Like, do they have a sales target, a quota target?
It's for whole sales team or for one sales guy. For whole sales team, it's for around 4,000 MRR every month.
Got it. So each year they should be adding about, call it $48,000 in new monthly recurring revenue.
We just started with sales. It was self-service all the time. Just last year we started with sales representative. So we are just trying how to do that. We are learning a lot. It's something we have to improve. Definitely.
What have you learned so far?
That it's also a good channel. Like I was, my background is performance marketer and UX designer and programmer. So I always wanted to do SaaS with performance marketing, not with sales guy. But then I changed my mind in 2018. I realized that if I want to go to a market, I have to change my mind, and we need salespeople because companies want to talk with us. So that's the main difference how I see business now and how I saw it 3 years ago.
Yep. Now, where are you today in terms of capital, right? So are you burning cash each month, or are you guys profitable?
We are cash flow positive from February 2018. So it's 1 year now.
Okay. And how cash flow? Are you talking $20,000 a month to the bottom line, $50,000? How profitable?
Ooh.
Do you know?
I have this number in Czech crowns. So let me.
Yeah, take your time and look it up. While you're looking that up, do you know churn off the top of your head?
Sorry, just let me calculate that first. It's about like 40,000 US dollar cash in our every month. We have additional cash, but we want to invest it this year. We want to invest a lot.
In what? Team?
Yeah, we are still small. We need more people in that team in sales.
How many people do you think you'll have on the team by the end of 2020?
20 new people.
20. Wow. Okay. Very cool. All right. What about churn? Churn's critical, obviously, in a SaaS company. What's your gross revenue churn over the past 12 months? He's refreshing Chart Mogul. I can see it in his eyes.
No, I can say net. It's better.
Okay.
Because as I said, we started with small customers. They are still there. They are still paying. They are still churning. But we are focusing on new power users, which are mostly enterprises and big companies. So we are upgrading them a lot. We're changing pricing like 4 times per year. So we are good in upgrading them. So net MRR churn is about 1 to 2%.
Okay, got it.
Some months we have negative. If we upgrade a lot of current customers, sometimes we have negative churn.
Can you split those out though? Because the net number is not really as valuable as splitting out the gross churn and then adding back the expansion. Are you able to break that down?
Yes. Let me check. So you want to know how what's its extension? What's its
Literally take all the customers that were paying exactly a year ago and look at the revenue number. Ignore logos, just the revenue number. A certain percent of that revenue was lost because people downgrade and churn. And then a certain percent of revenue was gained because you upsold other customers in that same cohort. So the question is, you were doing about $80,000 a month a year ago. How much of the 80,000 was lost on a percent basis? And then how much did you gain on top of that from expansion revenue?
that number I can't say you, but for example, last month from extension we have like 5,000, almost 6,000 new MRR
In upgrades?
From upgrades. Yeah, that's our upgrades.
And how many downgrades?
Downgrades, it's about 1.5 thousand.
Okay.
100. It's contraction.
Yep.
We have a lot of reactivation as well.
Yep.
Then new business MRR. So basically, extension and reactivation, new businesses generating us like 11,000 net new MRR grow every month. Last 2 months, it's about 10,000, 11,000 new MRR every month.
Including new customer adds.
Yeah.
Yeah. Well, yeah. Again, churn data does not include new customer additions. It's just looking at historical cohort performance. But generally, what you're telling me is you're about 100% net revenue retention. Your upgrades more than make up from the downgrades from that same cohort. Yeah. Okay. Very cool. What about customer acquisition cost today? So what are you paying to get a new $80 a month customer?
It's 1 to 5.
What do you mean 1 to 5?
Like customer acquisition cost, it's to, like if we have lifetime value about $1,000, so our customer acquisition cost is 200.
Okay, so is that what you're paying right now? $200 to get a new customer that pays 80 a month?
Yeah, including all the costs for employees and
okay.
all the money.
Well, I mean, that's healthy, right? I mean, that's a 2 or 3 month payback period, so that's very manageable. Are you looking at raising capital today?
Maybe in the end of the year, we are thinking about it, because right now we have a lot of money. We need to grow team, and we are preparing ourselves to be ready for investment in the end of the year.
Well, do you have a lot of runway? How much cash do you have in the bank right now? A couple $100,000?
Ooh, again, it's in Czech crowns. So,
while you look that up, what's this tool that you use in case other people want to use it? It's called Czech crowns.
Czech crowns. Czech crowns. It's our currency here.
Oh, so got it. You have to convert it.
Yeah. Let me check. It's hard to say because we still have two products in one company. We are still one company, but we have two products. As I said, we started with SmartSub. It's a live chat solution, and
yep.
That's why we can't raise now, because we need to spin off SmartLook from our current company and create SmartLook as a separate company.
Well, how much revenue does the other company do?
Like it's almost like the same size. SmartSub has the same size as SmartLook, so like it's it can be like 300,000 MRR right now.
Yeah. So total right now, you're doing about $4 million in annual recurring revenue across these two products.
Yes. Yeah.
Yeah. So how much cash in the bank?
Ooh. Let me calculate that.
And where are you based again? Which country?
It's Czech Republic, in Brno. It's close to Prague.
Yeah.
Brno is the second biggest city. So we have around $700,000.
Yeah, so you don't need to raise capital right now. You have plenty of runway to work with. Yeah. If you do raise capital later this year, how much would you try and raise?
This is something I don't want to share now.
Well, is it you don't want to share it, or you're not sure?
I don't want to share it.
Okay, so you already have a target of how much you would like to raise.
Uh, if we raise in the end of the year, there will be completely different MRR. So it's hard to say.
Okay, yeah, that's what I was saying. Is you're actually not sure because you don't know how much you're going to grow over the next 8 months.
Yeah, even if I know or there is some prediction, I don't want to share it now.
Yeah,
We
yeah,
need to
yeah.
discuss our current investors first.
Yeah. Well, so who did you take the 250,000 from?
Sorry.
You've already raised 250 grand. Who did you take that money from?
Oh yeah, from Czech investors. We have two. There was co-investing. Two investors co-invest us in 2016. So Reflex Capital and Webnode. It's also a SaaS company.
Yep.
Something like website builder. I don't know if you know that.
Yep, I know. All right, very good.
Okay.
Let's wrap up here, Peter, with the famous five. Number one, favorite business book.
Oh, I have a lot of them. Almost everyone is good. Maybe last year was Radical Candor.
Number two, is there a CEO you're following or studying?
No, I don't follow any. CEO.
Number three, besides your own, what's your favorite online tool for building the company?
Favorite tool? I use my to-do list. It's GQs.
Yep. Number four, how many hours of sleep do you get every night?
7.
And what's your situation? Married, single, kiddos?
I'm married. I'm expecting due date is in 3 weeks.
You have a baby coming in 3 weeks?
Yeah.
Wow, that's exciting. Congratulations. All right, and how old are you?
33.
33. Last question. What do you wish your 20-year-old self knew?
Study more, drink less, spend less time in clubs and pubs.
What's green glass?
I said study more, drink less.
Oh, drink less.
Spend less time in clubs and pubs.
Guys, there you have it. Peter launched Smart Look as a free tool in 2016 to compete with companies like Hotjar, right? Basically a user session tool they spun out of their last live chat company. Both companies now doing about $2 million in terms of run rate. They got their first 100,000 signed with spending $250,000 on Facebook ads, signing free trials up at $5 a pop. They've now grown that into 2,000 paying customers, paying on average $80 per month for about $160,000 per month in revenue, 100% year-over-year growth. They're profitable, taking $30,000, $40,000 to the bottom line every month, sitting on $700,000 of cash in the bank. So no rush, healthy company. They've only raised $250,000. Peter, I love this story. Thanks for taking us to the top.
Thanks for inviting.
You guys know I fight like heck to get these data points for you from these CEOs that rarely do these kinds of shows. If you want more shows like this, make sure you subscribe right now. We're trying to get 10,000 YouTube subscribers by the end of September here, 2019. And it would mean the world to me if you clicked now to subscribe. Additionally, I've got 2 more great interviews for you. If you want more data points from the world's leading SaaS CEOs, click and watch one of them right now.